Good morning. Right, I thought I'd show you something a little bit different. So those of you who do know me and follow me know that I like, as well as doing sports trading, I like crypto trading. I'll show you the reason why, and you might get it a bit more. It's not as hard as it sounds, to be honest. It's really easy, and it's just easy to move money about as well. So I'll just show you this. I mean, I've put it on this one because I don't want to interfere with my normal trading. So I've got it on demo. So when you go on this site, which is called MEXC, I'll put a link in, and you can play around with demo trading, which is ideal to get used to it. So if you want to have a go at this, like I say, I'll leave link for MEXC, and just want to demo bit. I think I've done a video about it, but I'll have a look through, and if not, I'll probably do another video. But what I'm trying to show you is that if you like, well, it depends what you like to do in trade. I mean, I trade, but if you like a bet, you know what I mean, you can turn a bet into a trade. But I'll just show you it as if you was doing it as some kind of a bet, right? So if you look on this, around this area here, you've got Betfair, and this is a race what's on today. Well, when I recorded this video, depending on when you're watching it. And as you can see, this one is a favourite. Now, if you're having this as I mean, again, it depends how you do it, whether you do it as a trade and you trade out like we do. But let's say, for instance, you're just doing it as like a kind of a bet. Well, you've got these odds at 1.73. So it's a favourite. It's not an overly strong favourite, but it is a favourite. Now, if you were to have £10 on this, at odds of 1.7, it's got to win. And if you win, you get your £7. And you also get your bet money back, or your deposit, which is this, whichever you want to call it. Let's get rid of that. Sorry about that. Yeah, so you get your £10 back and you get a £7 profit. So you get £17 back. Like I said, £7 profit. The thing with this, with the race, is it doesn't last long. It's, what is it, this one? It's 2 metre. So it's not going to last long, that race, and this has got to win. It's going to be one or two things. It's going to win or lose. So it's got to win for you to get your £7 profit. Straightforward. That's what a bet is, as we know. Now, you can do the same thing when it comes to trading. So if you don't want to do an actual trade in and trade out, or a long-term kind of thing, you can do this. Now, this is on leverage, what they call leveraging, which again, depending how you do it, it can be good or bad. If you're just accepting a loss, like you are doing with betting, like I say, if you treat it like a bet, like you would with this, then leveraging is really good. And the thing is, you get a longer time frame, right? Because this, what I've set up here, this leverage on this trade, is literally exactly the same as this, except for you getting more money. So it's kind of like what I've got this set up at is this is if this is 2.0 favourite. So yeah, so as you know, if that were odds of 2, you'd be getting £10 back on that. But if that were odds of 2, then he's got a less likely chance of winning. Because the higher these odds get, the less chance it's got of winning. So odds of 2 on this would be brilliant. You'd be getting 10 back. But again, like I say, it's got to win, and there's a small time frame for it to win. So going back to this is like having odds of 2 on that horse. So if you forget that, I've got this on Bitcoin at the minute. If you forget this is Bitcoin, pretend it's a horse, because we do have these kind of graphs in as BetAngel software, what we use. So if you pretend this is a horse in a race, and you've had exactly the same on, so this is leveraged at 160. So it's 160 times whatever you put in on the price what you buy. So it's like, say you're having £1, you've got like 160 times that, £160 or dollars or whatever you want to call it. So it sounds like it's a loan, but you don't need any collateral for it. All you need is your margin, because your money, what you're putting in. Is that a bit out? Let me see if I can move it down a little bit so you can see. You can see right down at the bottom here, it says estimated margin requirement 9.99. So it's like 10, it's in dollars. It's like $10. So if you class that as £10, just for an example. So that's your bet. That's your margin is like your deposits, your collateral. Just make sure, because, well, you're saying that you don't have to trade out, because what it'll do is it'll close you down if it drops this price. So because of the leverage, this is what price it'll close up at. So if it dropped all the way down here, it'll close up at this. And that'd be it. It'd be done. But if it went up to here, you get your 10. So whichever way, you're only going to either win or lose your £10, same as you would with this if it were odds of 2. But the thing is with this will run a lot longer. You've got more chance of it coming down here if it does and going back up again. So you've got a longer run. So it's like having an horse race, what could last for an hour or 2 hours or 3 hours or even a day. With this as well, you can also, if you want, you can cash out. If it goes up here, you can cash out for a bit of profit, or you can part cash out, just take a bit out. Same as what you can do with this when you're betting, but you don't get as much time to do it because once this is in place, you know these odds move like crazy. So you do, unless you've got like your betting software, and even with that you have to be quick and automate it. To get in and out is near on impossible. It's in a race. Whereas this is simple. With this as well as you've got time to think about it, so you can wait while these little curves come in. Like now, you're probably coming now. What I'll do with this one is just let me pause it actually, and I'll set one up and we'll have a look at it, see how it goes. That's probably the best bet. So this is where you set your leverage up. You've got a slider set to 160, 160, like that. And then this is where you put your amount in. So we're going to go for, let's put it at the market price. And I forgot it, wait, 1,600, weren't it? Because we've done it at 160, so that should, yeah, as you can see, it makes it at round about, you can see it, 10. So we'll click on that. And we are doing this in demo mode, by the way, so that'll give us as liquidation price there. So when it hits that, which I'll mark off in a bit up there, that's all you'll lose, unless you set auto margin, which I'm not doing because I'm just doing this as if it's a bet. I'll copy that, come back up here, I'll just put this in. I think, has it done it? I don't know if it's done it, I don't think it has it? 571. 85606, probably have to put it in manually. It's got a wait, 60. So I've set that back up again there. So we're on. Took me, I had to pause it then while I did that because I couldn't work around everything. So basically what we've got now is we've got that trading like I said. So if it goes up here, we'd be £10 or dollars in profit, and it'd be 10 minus here. So this is like an horse race. This is where you lose, this is where you win. You can imagine this as if it's the horse racing. So what you can do now is one or two things you can do is you can just wait, you can leave it, we'll make a cup of tea, whatever you want to do. It's not as fast as an horse race, so you've got more time. And if you wanted, you could put some more trades in, or have a look at some other cryptos if you wanted to do that. Somewhat a bit move, because there is somewhat move a lot faster than this one. There's one or two things you can do with this now, because you imagine this as your horse race. Like I say, you could go on for a long time, might as well go make a drink. Or you could sit and watch it, and you could decide if you're going to come in again, which is what you could do. So you could put your auto margin on just to cover yourself. Just be careful with it, because like I said, when it does hit your margin, it's going to take some out of your balance and keep adding that. Or you can add a bit on here. So what you can do is, if you wanted to risk a bit more, then you could add to your margin. So you could, like, I'll show you. So if you, say we added another 10 in, it'd take your margin down even more, just to 85 if you wanted, just a bit lower, which would be, where are we? Down this area, I think it were. Take it a lot further down. It's up to you how you work it, or you can just take that as a loss, like if you had a bet, because if you lost this, that's it, it's gone, you're not getting it back. So it's exactly the same with this. So you could let it up margin call, then you could decide if you're going to come in again, because the thing is, it's not a guarantee, but when you've got, if you see these, when you've got these bouncers, what can tend to happen is, as soon as it hits this, it's almost a guarantee that it'll more than likely go back up again, or it'll come a bit further down and then bounce around. So you could just sit and wait and watch it for a bit and think like it does. If you can see these here, it turns around and come in again. So the thing is with this, a lot of people don't like it because they don't understand it. But if you like to have a little flutter, I find this is a better way of doing it. So like I say, I trade all day with this and Betfair. But what I like to do is, now and again, I like what I call a bit of flutter on this. And sometimes it works out really well. The other thing what I haven't mentioned as well is, like I said to you, it shuts down here. So you can imagine that as if it's the horse what's lost. But the bonus is if it goes upwards, it doesn't shut you out here. So you've got endless profit. So what you can do, which I've done before, is if it starts to get to this point, then you can either cash in if you want, because it'll not shut it down at this point. This is just an example. It will here, because this is your margin call, but it'll not here, it'll carry on going. So what you can do is, you can put yourself a stop loss in. A bit like you can with BetAngel software. You can put yourself a stop loss in. So what you could do is, when it gets to here, you could put yourself a stop in about here, about the halfway mark, which would be about $5 or pounds, whatever you want to call it. How you want to work it out. And then you're guaranteed that 5. You're in, it's like a free bet. It's like when you create a free bet on Betfair if you've done that. So you can leave that in. And then if that carries on moving up, you can keep moving your stop loss up. And if it's a good day, I mean, you know, if you like this one, if you see this, so say you had this trade, say you had it in this area and it went past, say you got it around here, it went down like it is doing now. It's going down a little bit. So say you had it in this area, it went down, but it didn't touch your loss. Ignore this line because that's what we've done now. And then it started to go up, and you've got this, your green line here, and it got to your 9. Then what you could do is you could just leave it and just keep moving your stop loss up. So you can imagine what you'd have done here. You'd have kept moving your stop loss up. And then say you moved your stop loss to here, we've got this green line at minute, and it had gone past and then come back down again. Then you could have decided here, thought I'll come out, or just left it to your line. And you made a lot more. You've doubled your money again, more than. This, like I said, that'd be what, yeah. So that's something else you could look at. Because it is a possibility, it could go up here again. It could go right down here. We don't know. But the thing is, if it went back up here again, I mean, what price were that? That were 87. So let's see if we can work that out. Just give me a second. I'll put the calculator up. I just put calculator up. I'll just put it in because it takes, I don't want to bore you when I'm putting all these in. So as average entry was this, which I've put in here, entry price. Close price, 87,400, which is kind of up here. So we're looking at this if it goes up. That's what we add in. We've got his leverage price on. We've calculated it. 257% yield, 25. So that would be a profit as well as your original money. This would come back as well. So you'd have this as profit. That's if you took it to here. Up to here, sorry. So if it moved up and you just kept moving your stop loss up and you decided to cut your losses here. Oh, like I say, even if it moved, let's move that out of the way. Even if it come back down and you'd kind of add your stop, let's say, about here. And as it turns back round, which would be, let's call it 87. Yeah, let's call it about 87. And we'll put that in and see what that comes up at. And that comes up at 18. So if you'd moved your stop loss like so to here about halfway mark, then just left it and it come back down again, you'd be hitting that. Be 18. And that's what you won't get with this. You won't get that with this. So you can see advantages on it. So right, I'm going to leave you with that. Probably have to watch it a few times because they have made it a bit complicated. But it's really not as hard as it looks once you get used to it. So I just thought I'd compare it to this. Just give you a rough idea, and I'll try and do an easier video at some point. All right, I love you and leave you and get on with this now and get back on my real trading.